And we're live. Welcome back, guys. So this week, so many things happening on the market, including the Fed interest rate decision, which is going to be the highlight of this week and this month. Then we have, of course, the US retail sales, which is an important gauge to measure the consumption in the US economy that accounts for about 70% of the US GDP. So it's an important data, and it's going to be relevant to trading indices and stocks. So in this briefing, I'm going to give you a full explanation about what to expect, what things to look out for, and how I'm going to trade it. I'm going to talk about gold, US 30, USD Japanese yen, and some other assets as well. First thing I'm going to do is check on the account statistics. Now you can see that this is a fully verified MyFX book with a real account, and also you can see that the account is now up 65% in about 2 months. The biggest drawdown was about 10%. That was at the beginning when I started the account. It wasn't the easiest period to start trading because of the Trump tariffs. This month the account is up 7.6%, and we're just halfway through March. Hopefully I can move this number up to about 10 to 15%. I would be more than grateful and happy with that. But overall, doing 65% in less than 3 months, I think it's a great result. And you can see the same thing, that this month so far the account profit is about £11,130. If you want to join in this journey, and if you want to see my analysis and trades every single morning, every single day, go to alphafx.eu. There's a 50% discount. You can join for £199 for lifetime. And I'm going to show you the Discord for members. This is what I sent out every single day. So you can see, for example, here I sent out a full macroeconomic analysis about what to expect, and I also gave out a notification that I entered in its sell position, price, stop loss, take profit, and then sent out some updates about the running trades. Then we went on to live trading, and you can see that the position I opened last time is currently running at about 393 pips on gold. So once again, if you want to join the AlphaFX community, if you want to see my trades, go to alphafx.eu. There's only 3 membership left. Hurry while it lasts. The first thing I do is always check the economic calendar to see what's ahead during the week. Immediately see that US is going to be heavy because we have US retail sales on Monday, and the US retail sales is very important because you can see that the US GDP is made up of 5 things: investment, government spending, export minus import, and consumption. Now consumption is important because it accounts for 68-70% of the total US GDP. And this is the demand side of the GDP, and it measures the consumption economy, and retail sales is a very good gauge to see that how much our beloved American friends are spending. Now this number is very important because we have on Wednesday the FOMC interest rate decision, and it's expected that the Fed won't change interest rate or won't cut interest rate because that's what they communicated in the last few months. But we also have some other important document which is more important than the interest rate decision itself. This is the FOMC economic projections. This is the document, this is what it looks like, and on one page this is the most important thing that we want to see, which is the dot plot. This is going to tell us about the future of interest rate decisions in the United States of America. And yes, I'm going to live trade this one, but this is going to be purely a members only live trading session. Going back to the calendar, we see that on Thursday we're going to have the usual jobless claims with the Philly manufacturing index, which is also another important indicator of the US economy. And on Friday, we are going to have no data, so it's going to be a day off for me. So pretty much the FOMC interest rate decision is going to be the most important event of the week, and I'm going to send out a full breakdown and full analysis to the members about what I expect and how we should trade it. Now that we analyzed the fundamentals, we're going to move down to the technical side. We can see that previous week gold hit a new all-time high at around $3,005. And one of the reasons why gold hit a new all-time high is because the US economy had a softer inflation reading. You can see that on 12th of March, we had 2.8% versus 3%. So inflation came down 2 percentage points, which is very good. And this is why gold skyrocketed into new highs, new territory. And that was about 1,000 pips. And we managed to catch a huge chunk of it during live sessions, during the morning, because I gave out the full analysis for the members and they were able to trade this successfully. And moving back to the chart, you can see that gold, as soon as it hit 3,000, it started to retrace back. One of the reasons for that is because the stock market also started to rebound. For example, if you look at US 30, we see that the price is following a very nice lower highs and lower lows. But last week, after the CPI data, so the market bounced back up because of the hopes that the US economy is doing well and the possibility that the Fed is going to cut interest rate in the near future. And because the stock market was going up, you can see that there was a profit taking on gold, because usually these go against each other. So when gold is going up, usually the stock market is going down because it's a hedging asset. But when the risk on mode hits the market, gold is usually going lower. And you can see that the previous all-time high was at 29.56 and price is currently retracing back. We have a nice bullish channel, which hopefully gold is going to respect and follow. What I'm expecting on gold is to come down minimum to daily pivot, but I'm expecting the weekly pivot to come down a little bit lower before the FOMC interest rate decision. And because the Fed won't cut interest rate, price should come down. So that is going to be selling the news because they expected, they announced that they're not going to cut interest rate. But because we have the summary of economic projections where I'm expecting the dot plot to come lower, gold should bounce back up on hopes that the Fed is going to cut interest rate sooner rather than later. And this is what's going to happen. In my expectation, that price to come down to about the previous all-time high. That's an excellent support level. So just under 3,000 at 29.50, 55. And then we're going to see a bounce back because we might have some bullish catalyst on gold and generally in the market. So once again, I will be looking for buy opportunities at the previous all-time high at 29.60. But right now, because of the profit taking, I'm expecting a pullback of about 200 to 300 pips. So I think this is a good short opportunity. And if you go down to a lower time frame, you can see that the technicals also confirming that we started to appear what it looks like a head and shoulders. So price shouldn't come any higher than 29.92, and if it respects this resistance level, you have a nice 300 pips selling to the downside. And then on Wednesday I will be looking for buys at this level. Let me know in the comments whether you agree with this analysis or you expect a sell-off or a rally on gold. Now it's important that we prepare for the coming interest rate decision and take advantage of the 50% deposit bonus by ForexC. The deposit bonus works in a way that, for example, if you deposit $1,000, then you get $500 returned to your equity or added to your equity, not to your balance, but to your equity. So this is extra margin. You cannot withdraw, but you can use it to trade it, and you can withdraw the profits and your initial capital. You can find a link below the video. Make sure that you use this discount because this is free money. Now moving back, the next thing I want to analyze is going to be US 30. We see that the bearish trend, the lower highs and lower lows already started to break and price came back out from this descending channel. And I'm expecting price to come back to around 42,200 with the upcoming retail sales. If the retail sales is going to be better than expected, meaning that the Americans are spending more money, you can see that the last month retail sales was quite disappointing. So I think we have more upside potential. If retail sales comes out positive this month for the previous month, then we're going to see a bounce back on US 30 because good retail sales data is usually positive or appreciating in terms of the indices, and retail sales is a good gauge. How much are the consumers spending? So I am bullish on US 30, and you can see that currently price is consolidating. So there's two options here. Either price is going to shoot up from the current price level, but what I'm expecting is a pullback on Monday just before the retail sales. So it goes against the trend, and then because if we have a good retail sales data, then we can see a bounce back up and we can catch this nice $800 move to the upside. Once again, if you want full analysis with the TP and stop loss, go to alphafx.eu, and this is the kind of analysis and signal that you get. NASDAQ, I'm expecting pretty much the same thing as on US 30, but with a little bit less upside potential because NASDAQ is a blue chip company, a blue chip index, and therefore US 30 should rally more, but NASDAQ is going to be less interesting. But generally speaking, I'm expecting the same movement to the upside and then a continuation lower, but that's going to be most likely on Friday or next week. The last pair I want to talk about is USD Japanese yen. Now, looking at the global yields, you can see that the Japanese yen interest rate is slowly reaching 1%, which hasn't happened for about 2 decades. So Japanese yen is strengthening, which goes against the US dollar. And because there will be no interest rate cut this week, the US dollar should weaken at the first 1 or 2 hours at the announcement of the interest rate decision, which is going to be bearish for USD Japanese yen. On the other hand, if the summary of economic contraction comes out quite dovish, meaning that the Fed reduced the expectation on the dot plot, then price could come back to the top of the channel and then drop. So again, 2 possible scenarios, but I can't see the future. It's the FOMC summary of economic projections which is going to decide about the future of indices, US dollar, and pretty much every single asset in the whole world. So I hope you enjoyed the analysis. Make sure you leave a comment and hit the like button. Thank you so much. See you next week.